Hello, everyone. Welcome to DNA's February 2025 webinar, Keeping the Spark Alive with Retargeting Ads. What an appropriate title for February, Valentine's Day, and speaking to marketing, talking to investor acquisition, which we work with many issuers, many companies on raising capital using these digital channels. You need to have traffic sources. Advertising is an obvious choice, and retargeting is where the performance lives for these types of activations. I'm joined here by Nikki Chung. Nikki, you want to give a little introduction on yourself?
Yeah, sure. I've been a media buyer for 8 years. I've been with DNA for three of those, and worked on hundreds of equity crowdfunding campaigns. We use retargeting, we use cold prospecting on social media, advertising across all of our campaigns, just to drive traffic. So really excited to speak to you guys about the retargeting strategy. I don't even want to call it strategy as in something that you should be doing, as in something, as a more as a fundamental, right? Retargeting is something you have to do for all of your campaigns. So yeah, I'm excited to be talking with you guys on some of these retargeting fundamentals.
Absolutely. And if you're not familiar with DNA, we've worked with over 900 brands, run over 500 investor marketing campaigns. It's a niche of ours, something we fell into working with startup to growth stage companies. And whether we were working on the marketing section of a business plan, investor pitch deck, first campaign to be scaled with capital, even participating in the investor presentations themselves, we were always part of this fundraising discussion. So once we learned we could use digital marketing, especially these tools of advertising, we realized, hey, we could be of a lot of value to our groups here. They're always looking to bring on more funding. So my background is in advertising, running mobile advertising exchanges in earlier stages of my career, and being able to target very specific audiences with set creative and take them down marketing funnels has been a big part of my focuses. So whether it's investors or another premium audience, like I said, it's just always been part of the discussion. But I want to pull up this deck, show you a bit about what we do and specific examples at that. Um, Having a little technical difficulty here. But as Nikki mentioned, we have worked on a high volume of these campaigns. Nikki is being modest, but is looked at as one of the top media buyers in investor acquisition. And he has been part of DNA here for over 3 years, and we we've been able to work on a high volume of these. Nikki, as I'm pulling up the slides here, you want to talk a bit about what it takes for a successful campaign?
I'm sorry I didn't hear that. Could you repeat that?
Yeah, do you want to talk a bit about what it takes to run a successful campaign here while I'm pulling up the deck?
Yeah, sure. Honestly, it takes a lot of successful, variables. There's a lot of variables to it. But to run a successful campaign, you must most definitely drive traffic, right? And that's through advertising, cold prospecting, and of course, what we're going to talk about today, some retargeting. I'd like to talk, about marketing as a whole ecosystem. So there has to be paid social, there has to be organic. I like talking about email marketing as well. So you need all three of those things coming together to really get a successful campaign going. You can't just do one thing. You can't only do email. You can't only do organic. You can't only do paid. Rarely will only doing only one of those things work out for you. So nowadays, it has to be all three, whereas you're reaching out to people, cold prospecting, you're getting them within your retargeting pool, retargeting them through ads, and then showing them organic content, keeping them engaged through emails, and even talking to them directly. We like to do webinars here at DNA as well. So doing webinars is another form of a touch point where you can connect with people on a more personal level rather than just showing them an ad on a screen. So we see, a combination of those things that are needed for a successful equity crowdfunding campaign.
Exactly. And what what are retargeting ads? Uh, it's those banners, those social posts that feel like they follow you around everywhere. When we look at advertising performance, the IAB, Interactive Ad Bureau, says 0.1% on a display ad is good performance. Better publishers, 0.5, 1%. Platforms like Meta, maybe 1% click through rate. You're shooting for a 2% conversion rate. Google says an average conversion rate is 2.35%. So the majority of the audience isn't clicking, they're not converting. And as we would do offline, following up with investors, sending an email, calling them, texting them, direct mail, it's going to be multiple touch points before they convert. Retargeting ads allow for that in a digital fashion. 26% of users will go back to a website as a result of retargeting. So it's very effective, especially when you're looking at 1%, 2%, bringing people back is crucial, and retargeting ads allow for that. Retargeting ads show the ads to previous site visitors and engaged users. So you put a tracking mechanism, a pixel, to capture IP addresses of everyone who goes through an offering page, a landing page, a website. And then you're able to bid for ad placements on these advertising exchanges, whether it's a social platform, a search platform, a programmatic platform, which gives you access to major media websites or apps. You're able to target those people specifically. I should say those devices, but those people behind the devices. And you're essentially targeting warm leads based on their engagement. You can retarget people at different stages of the funnel. So if the first offering page is a view content event, maybe the next is add to cart, the following initiate checkout before getting to purchase. And this is terminology that's standard. It's commonly used on Meta's Pixel. You can have ads that are different for the retargeting of people at each of those events. Someone who's invested could receive completely different ads. And we'll see 10 to 30% of people participating on multiple times on Reg CF campaigns based on case studies, campaigns we've worked on. So you want to create a multiple touch point experience. If someone's coming from other channels, let's say they're already a subscriber to your email newsletter, or they've been contacted by you directly, and now they're seeing retargeting ads. And then they read an article in the news about you. And then they watch you on a podcast or speak at a conference. And then they see the retargeting ad again and convert from there. Hey, that's effective. They may have forgotten altogether. We're going to talk about the funnel and different stages and how many people intend to invest, and that there's a conversion rate, only a percentage of them do. But first and foremost, that's why we use retargeting ads. Nikki, why does it take multiple touch points? And what are we looking at on this page?
Yeah, so investors typically need 7 to 17 touch points. That's what we see with our marketing for equity crowdfunding specifically. And it usually takes, there's different variables to it. It usually takes multiple touch points because, most of your investors are not going to invest before 7 touch points, right? Most people, as you may relate to, look at an ad and most people don't just think, oh, that's cool, I'm just going to invest into this, right? A lot of people are actually doing their own due diligence. So they're looking you up on social media, Facebook, Instagram, LinkedIn, maybe TikTok, right? If they're into that, they'll Google you, see what you're doing online, see if you have an online presence. That's why I say actually it's like a side point, but content marketing is also very important as part of the advertising process. So going back to 7 to 17 touch points, it'll take that many touch points before they make a decision. They're doing their own research. And while they're in between those touch points, they're maybe they're getting emails, maybe they'll hop on a webinar that you're hosting. They're gonna see different ads. They're called retargeting ads, right? Um, and getting those touch points in are gonna push them towards that lower part of that funnel and get them to eventually convert. Um, but what in between those, in between that time, you want to make sure that they're engaged and they're continuing to see your presence on social media and on other platforms and touch points as well.
So, as Nikki said, you really want to start with the marketing strategy. We've put out webinars you could find in our YouTube channel on how to put together, Using the model, we've built an 8-point plan, written articles about it, leave workshops on it, and you really shouldn't activate marketing until you have a full strategy, an algorithmic roadmap built out. Based on what's happening in your industry, looking at competitors who are fighting for the same audience as you, and the investors, the target audiences that you're going after are likely going to see their ads as well. You want to map out your target audiences, touch points, the marketing channels you're going to use to reach them, the creative that's going to run within each of those segments, each of those ad sets, each of the audiences that you're targeting. You look at strategic partnership opportunities to be able to mention those groups, to be able to promote to their warm pool of your target audience, their loyal, responsive followers. And then most importantly, you need to have projections. So digital impressions, clicks, conversions for each channel, for each month, maybe associated metrics for each of those, maybe down to the week, even down to the day. Uh, but when you're looking at that, retargeting is really set up to produce a higher conversion rate for everything. And content marketing, the funnel you're driving them into, is based on that follow up. So you're basically purchasing additional, you know, follow ups of that target audience. Why invest in retargeting? Multiple ad types build momentum and a fear of missing out. If one day I'm being targeted with an ad from, let's say, a public company, maybe they're running a Reg A, and it's showing a new partnership, CEO shaking hands with another major CEO and talking about what that's going to provide for the business. Mentioned examples of podcast appearances and conference appearances, but it can be a video of an anchor investor speaking about why they participated. It could be a strategic partner saying, this company is doing things we've never seen before. That's why we're working with them. Excited about where the industry is going to go. You, of course, want to make sure everything's compliant and you're saying the right things, but you can create this sensation of, I like to say this, I could visualize it perfectly. That this is a moving ship. It's hitting its destination, and with or without you as the prospective investor, now's your time to hop on board. But the round is closing. It's filling up. Here's how many shares are left. The bonus shares and perks that are restricted to certain periods of time, that's ending next week or the following. You can really create immediacy and inspire action based on the messaging that builds off that momentum and creates FOMO. Nikki, what about segmenting audiences?
Yeah, so when it comes to your retargeting audience, there's different segments of that retargeting audience that you can target. So if you're running ads, you can look into your events managers, see what type of events you're tracking. Usually it's going to be page view, add to cart, initiate checkout, and purchase. Those are the simple ones that most people have set up for. And you can segment each one by their engagement level, meaning, which part of the funnel they're in. So a lot of people, page view is essentially, they're still in the awareness stage, but they might have some interest. It's typically top of funnel, and then add to cart, initiate checkouts. Those are mid, towards close to bottom funnel for initiate checkout. So you want to segment these audiences because each person at each stage of the funnel is going to respond to messaging differently. Someone who's just at the top funnel most likely wants to know more about what the investment opportunity is, why it's such a great investment opportunity, versus someone who's ready to check out, right? Ready to place their investment. They most likely have a couple questions they need answered. So you want to run a different type of ad even and target them with different messaging to try to get through to them. And some examples that we utilize for people who are mid to lower funnel is we like to do webinars. We even do lead form ads to try to get their email, phone number to reach out to them directly, to have a conversation, one-on-one conversation with them, to maybe alleviate some of their fears and misunderstandings about the company to get through with that investment. So they're just one step away from investing, and retargeting helps you reach out to them again to really close that investment, especially if they're in lower parts of the funnel. You want to segment that, and reach out to them again and then close it.
Yeah, and you're going to see a conversion rate at each stage, each of those events that Nikki talked about. So we'll look at the retargeting pool, the size of the list of people that have been to that offering page. It's another type of retargeting we'll mention in a bit here. It doesn't have to be just where the pixel's placed, but it may be 50,000 people. A new offering may have less than 1,000 in their retargeting pool. It can be a predictor of what performance is to come. First question I'll ask a prospective issuer group we may be working with is how large is your audience? Your email list, your social media followers, your site traffic, because if we're able to get warmer people there and then segment the audiences by the page that we're targeting them off of, we're going to be able to produce at a stronger level. I had mentioned before 10 to 30% make repeat investments. There are misconceptions that you want to turn advertising off if someone's already invested. Not quite the case. You could keep that exposure going, and the likelihood of a repeat investment, or more importantly, social sharing, getting peer-to-peer marketing occurring. That's the ultimate form of marketing. If I get contacted tomorrow by a friend saying, "Hey, you should really invest in this company. I just bought some shares. I'm going to pay a lot more attention to it than if I, you know, receive any other type of marketing from that group." So you want to stimulate that, and you want to keep it fresh and in their mind that, hey, you invested in this company, you should look at the traction and potentially share it. You could also target incomplete checkouts with direct outreach. So if someone puts in their information, you can have the retargeting ads running, but you can also send them messages with direct outreach as a follow up. And then you can only message them so much. So the ads going simultaneously with that will likely, as a rule of thumb, produce a higher conversion rate. So, as Nikki was saying, can support each stage of the investor journey here, each event with advertising, with retargeting. Nikki, what does that look like outside of just one ad channel? You were talking about content, you're talking about the pixel for just Meta. What does that look like for the entire investor journey?
Yeah, so it's a whole ecosystem. So starting from touch point one, where they're likely seeing a cold prospecting ad, that's where they enter the funnel. And that's where the awareness stage happens. Maybe they're seeing a couple of cold prospecting ads. There's also content they're looking at. They're doing their own due diligence. Maybe they signed up to receive newsletters from you. So now they're receiving emails. They see an ad maybe for a webinar. Maybe they're in the mid funnel now, right? They've looked at the page multiple times. They've looked at emails. They've considered investing. They just haven't pulled the trigger yet. So now is a good time to really um, retarget with ads and then continue to push out emails, content, updates. Those are all very important parts of the ecosystem and the conversion funnel. And then eventually, once they started the investment journey, maybe they stopped midway through. That's a good time to run some lead form ads. We've seen that work before. Try to get a phone call with them, maybe reach out on LinkedIn, right? If you have some of their information, that's always a good touch point, and it really supports each stage of the investor journey to hit them with touch points through different ad channels. They want to see you. Investors are more likely to invest if they see you across different channels, right? Not just, oh, I only see them on Facebook, right? Maybe they look you up on Google. You have a website. You're doing stuff. You're on portal, you have updates, you have a nice campaign video on social media, you're posting organically. It's not just, a page with no posts, no updates, something boring. And at times I see comments on ads asking, "Hey, is this a scam?" Right? There's a lot of scams going around on the internet. So having that personable touch point, whether it's a webinar, phone call, or email, is going to move the needle much better than just posting on social media or just doing ads.
And retargeting, it's limited by your audience size, as I was mentioning. So what you could spend on on retargeting, the amount of impressions, the amount of clicks, the amount of conversions you'll be able to produce is radically different if you have 5,000 people that have been tagged in your retargeting pool, or 100,000. But you can take it to additional channels. So you could start running retargeting on secondary social advertising platforms. You could run retargeting on display networks. You could run retargeting from various different access points to get to higher and higher and higher volumes. You want to run prospecting at the same time and break advertising down into those two categories of prospecting to drive people into the funnel, and retargeting to keep those follow-ups going. Given you may have some organic traffic sources, you may have your first degree and second degree networks producing enough traffic to then retarget. But even in those cases, you want fresh contacts, prospects, new people, your target audience getting to your deal, getting to your offering page every single day. So it's a balance. Now, towards the end of the campaign, you may want to reallocate heavier and heavier percentages. At first, maybe it's 20% towards retargeting. If your audience is large enough and you're a bit more aggressive, perhaps it gets to 30% retargeting. But during the final weeks, during the final days of your campaign push, it can get to larger and larger percentages, but only if your retargeting pool is large enough. So you want to target the top 10 to 25% income brackets. It's really higher than that, but you get the idea. The more disposable income, the more net worth, the more household income in general that your targets have, the easier it's going to be for them to invest. And they may not come in at the minimum. Minimum may be, thoughtless for them. Hey, I'm going to put in $500, $1,000, whatever. But it may not be enough chips on the table for them. They may come in at 10, 25, 50, 100K. And that still may be relatively small for them based on who you're targeting, where it fits in their portfolio, what they need to allocate in a given period of time. So you want to map out your audience in that strategy stage down to the persona level. It's not just, hey, how much money do they make or what are they worth? Where do they go online? What do they do on the weekends? Who are their biggest influences? Where can I reach them where they're not seeing investment opportunities? And what other ads, what other types of content are they converting on right now? Because success leaves clues. There's elements of that you can incorporate into your own model. Um, and then as you're building your prospecting audiences, you can start retargeting them. So, as we discussed, you want to retarget site visitors, and you also want to retarget people who engage with your social pages. So on Meta, there's a page engagement retargeting audience you could build, and the pixel, it'll actually only allow you to go to 180 days back. Most commonly used at 30 days. People have visited your site in 30 days. But with the page engagement, it's anyone who's engaged with your page, liked, commented, shared, took a screenshot of any of your social posts. They've followed your page, and you can go back to 365 days. So they've pressed the follow button the past 365 days on top of any of those engagements I just mentioned, or they clicked on an ad. We've done any one of those, types of interactions with an advertisement, and back to 365 days. So while the Pixel may not track everything, in fact, if you're an iOS user, unless you opt in to allow a mobile app publisher to track you off app, uh, you're not going to show up in the retargeting pool. You're not going to show up in the advertising reports and metrics. But just from the pixel. But clicking on the ad and having this page engagement audience set up, you are going to get tracked because it's in app. They can't track you off app, but in app they could track you. So I'll see campaigns that are, just set up around pixel retargeting and look at that as a huge miss on social media audiences. As you can imagine, I see it all. I mean, we work with many of the top live issuers in the space right now and historical at that. Uh, I've seen different setups from agencies, portals, tech partners, in-house buyers, contractors, PPC providers from overseas. I get to see how it's set up. We were looking at a campaign the other day that was for webinar signups for an issuer, and it was all around traffic, where you're telling Meta to optimize towards people who are clicking versus people who are converting, completing a lead form. So it's going to use its machine learning towards people who click, and they were seeing very little signups. So just something to look at. There's probably ways to improve your setup. You should be talking to as many people as you can, even showing them your build, so they can tell you. Sometimes it's little tweaks and massive differences in the results. Uh, the best analogy I've heard is driving a Ferrari. You put a professional driver behind the wheel, and they're going to be able to open up all different types of capabilities that the everyday person who's never stepped into one before is able to utilize. So it's the same looking at these media buying platforms. There's so much more you can do versus just driving the speed limit. But track cart ads and checkouts, target hot leads within 7 to 30 days. As we've discussed, what's going on this page, Nikki?
Yeah, we touched on some of these points before. Higher investment minimums need more consideration, especially if you're doing a Reg D, maybe Reg A with a higher minimum. We're definitely gonna need more touch points, to convince people because higher amount requires definitely more of an investment to put in. So there's more time needed to consider investment like that. Investors research across multiple platforms. We touched on that. And then most people prefer joining campaigns with momentum. And I like to make this analogy with a restaurant where, you know, people, if there's two restaurants on a street, one with a long line, another one that's empty, most people are gonna go to the one with the long line, right? Even if they don't prefer to wait, they most likely have the thinking that that restaurant is probably better than the one with, no line or if it's empty, right? Same with equity crowdfunding. Most people will prefer to take their money to campaigns with more momentum. And most people, when it comes to equity crowdfunding, don't want to be the first ones into a campaign. They want to ride that momentum. So once a campaign sees momentum, that's where it really takes off. A lot of people join in. You cannot crowdfund without the crowd, right? And in order to draw that crowd, you got to do marketing, paid social, content, even most definitely retargeting to try to get more people to come in. And then last but not least, building trust requires consistent presence. And that's really where retargeting kicks in. You want to consistently show up. You want to be there. And this is really like a sales process, except it's just digital, right? So it requires a lot of follow-up. It requires a lot of different types of ads to get people to trust and understand what you're doing on a social media platform where, like I said earlier, there's going to be scams going on. There's going to be people asking you if there's legitimate investment opportunity. Even if you're on a portal, a lot of people that you're reaching out on cold prospecting might not even know what equity crowdfunding is. So imagine the amount of touch points it's going to take in order to get them to understand what equity crowdfunding is, and then to understand what your business does, and then to understand later on why it's such a good investment opportunity. So it's going to take multiple touch points. It's going to take multiple different types of ads where you want to have ads talking about maybe any patents, partnerships you guys have, milestones are all really important. Those are some examples of ads you can run to really build that trust and get those touch points in with retargeting ads.
Reach them during their consideration process. Balance ad frequency without being overwhelming. There's frequency capping. You can control frequency setting across different types of platforms and spread touch points across different channels. So if you're reaching someone while they're scrolling on Meta, Facebook, or Instagram, if you're also showing up on their feeds for TikTok, uh, Google's display network and banner ads across different websites and apps that they're frequenting, even if they're not, you know, investor focused. Uh, Going back to the ad exchanges and programmatic ad spends, you'll often see on site lists the best performance on a weather.com type of site. But boring sites that people check can have the strongest conversions. And then if you're looking at the site lists and seeing where you're getting the most conversions, could optimize towards that. You want to cast a wide enough net of tier one sites. And again, it's all going to be in the retargeting. So if you're using those sites for prospecting or using it for retargeting and you have the ability to ramp up your retargeting pool further, you are going to be in a good place. I wouldn't worry too much about overwhelming them. If you are getting to very large ad spends, you're going to want to pay attention to the frequency, how many times someone's seeing an ad. And if they're seeing it more than 3 times a day, that should be taken into account. If it's 3 times a week, there's brands that are targeting me, on every channel each day. Marketing platforms, investment opportunities, they're the ones I remember more. The jingles that you hear in commercials and can reference from the time you were a kid, it's because they were playing those commercials, those activations so many times. It's a fundamental element of advertising is that repetition. So we'll talk to founders at times that say, "Oh, I don't want them to see it more than once a week." And it's like, well, we can do that. But as we get to larger and larger spends, it's naturally going to occur more, and it's good. The more times the same individual hears the same piece of information, but from the more sources, the better. So, if you're being featured by third parties, if you're running ads on more channels, prospects won't even remember where they saw you in many cases. We'll be able to track it back to an ad and they'll say, "Yeah, we read about you somewhere online, saw you somewhere online. I think I saw a post." So whether it's from more sources or starting from your brand, you want to make sure there's high volumes of touch points involved. How do we keep it fresh, Nikki?
Yeah, and I think fresh should be highlighted here. That's the key point here, to keep it fresh to avoid creative fatigue. So when it comes to retargeting, especially if you're running on a bit higher of a budget, Facebook tends to run the same ads over and over again, and your audience is going to see some of the same ads over and over again, week over week, especially if they're performing well and you haven't segmented out the people who've invested. It's going to get annoying, to see that same ad over and over again. So you want to keep it fresh. And you don't want people to mark your ad as spam. That's going to be negative towards the ad's performance. So we definitely want to keep it fresh with different ad types. So some of the ad types that I like to run, just milestone ads talking about the amount of investors you're getting, the total amount raised. Maybe you've done a previous campaign, talk about how much you guys have previously raised, talk about the team, patents, any awards, those types of ads, a variety of ads to keep it fresh. I like to also do selfie videos. So we have clients, pull out their phone, do a quick 20 to 30-second video talking about the investment opportunity. We see that work quite well actually, because it creates a more, I guess, personable connection between you and your investors. So it's literally you pulling your phone and talking to them, right? It's more native also to the platform. And actually, Facebook prefers those ads a bit more than just a static graphic or any motion graphic, just because it's native again to the platform. So, most people who are scrolling through Facebook aren't necessarily looking to invest in something or be sold into something, right? They're more so looking for any updates. Maybe they follow sports or news. They're looking for anything new about their friends, right? And so a selfie video like that that pops up on someone's newsfeed is more close to what they're looking for, versus an ad saying, "Hey, invest into our company." That's just a static graphic or a motion graphic. So we like to keep it fresh, uh, use varied content, and we don't want to spam people with the same exact ad week over week.
That is a fact. And so many updates that you would likely share offline with the prospect, you can have live in those video formats that Nikki mentioned, or copy at that. But video is so engaging and native to the platforms that's what people expect to see from their friends, family, influencers, pages they follow. You can utilize that same type of creative format for what you do. Prioritize targeting focused on the engaged audience, those who click rather than worrying about those who do not respond. Again, 1% of the audience clicking, maybe on a retargeting ad set, 2 to 5%. We have campaigns that are running much higher, 11% click through rate on the retargeting, but it's the majority of people who are not clicking, not responding, and that's not who you're playing for. You're looking at the ones that are going to engage with digital content. They are going to evaluate the opportunity full-heartedly and be more engaged and convert from there. So someone who isn't going to convert from an ad anyway, don't worry about whether or not they retarget. It's just not going to get you anywhere. If you're finding more pockets of performance within the retargeting ad sets, you're going to be able to scale that and produce more results through the process versus, you know, reputational risk, or, hey, this one person I know saw the ad too many times and, 4 times now, and they told me about it. Don't worry about them, even though they are technically responding just in a negative way. You want to look at the actual traction you're getting, who's moving from one stage of the funnel, one stage of the investment consideration process to the next. And keep pushing forward. Understand that serious investors interested in becoming shareholders are less likely to be deterred by frequent ads compared to those who wouldn't invest. As I mentioned there, you want to focus at that warm area of the funnel. Nikki, why is it important to test out multiple things at once?
So we always like to have 5 to 10 different ads in rotation, testing, whether it's testing or scaling actually. But we like to test a variety just because you have the budget to, if you have the budget to, you should definitely test a variety of different ads to see what works and what does not work. Out of those 5 ads that you're testing, maybe 1 or 2 work well. The other 3 don't work as well. You want to take those learnings because when you're doing media buying, you're essentially buying data, right? You're buying data to understand what works for your brand and what doesn't. So when you get that data back, you want to analyze it and make sure those click-through rates, CPCs, those cost per conversion, cost per acquisition numbers are hitting KPIs. Once you have those numbers, you'll have an understanding of what works and what doesn't. So the ones that do work, you definitely want to scale them up, spend more budget. The ones that don't work, you want to make sure you turn them off and take those learnings and understand why it didn't work. And same thing with the ones that did work, understand why they did work. And then what our team likes to do, we like to make different variants of the ads that do work. So for example, if we think this video has a really good hook, perhaps that's the reason it's working. We'll keep the hook and we'll change up the body part of the video, and call to action is essentially the same. We'll test different types of bodies, test maybe 2 to 3 other types of variants of that ad, and continue testing and scaling the ones that did work. And then out of those tested variations, some of them might work better than others. Who knows? Maybe they all work and you scale them all up. Some of them won't work, so turn them off, right? So that's a rinse and repeat type cycle that we like to utilize. We show progress through milestone updates. That goes back into more retargeting stuff that we're talking about. Use video testimonials for social proof. I think this is a very strong one, using video testimonials, whether it's a investor testimonial, whether it's a client testimonial, even product testimony for doing a product, right? Those work very well. You want to have people as many people as you can talking about your campaign to really grow that momentum and grow that crowd. Last but not least, highlight specific growth numbers. If you just hit 500 gram raise, you want to make sure it's out there. You want to make sure you're showing momentum because, maybe a month ago you were just at, like 400K, right? And now this month, people are getting retargeted with your ads from last month, right? They're saying, oh, these guys are 500K now. They're really moving along with or without me. I got to invest today. It really drives that FOMO to when you highlight those specific growth numbers.
And the same way we talked about casting a wide net with audiences and letting the data show you what's working, you want to do the same with creative. We have assumptions going into a new launch. Hey, these ads will probably work best, but we always need the analytics to show us what's physically moving the needle and then can optimize towards it. As Nikki said, duplicate, maybe change up messaging a little bit, change up the visuals. The next creative iterations can be based on what is physically producing the results. You can also optimize by funnel and the destination URL, the landing page, the offering page, the webinar sign up, what have you that you're taking people to. And again, looking for those pockets of performance to do more. And these are great examples that you should be using in your creatives. How to effectively measure the success of your ads is a webinar in its own right. It's something that we can spend a lot of time on. KPIs, key performance indicators. You want to aim for a dollar cost per click on many channels. It's fine to pay more for clicks, but you're going to see how it feeds into the next stages of the analytics. And we'll have, clients, founders, CEOs that, tell us things like, hey, we're only focused on performance. We only want investments. We only want results. And truth of the matter is that that's what everybody is shooting for. But if you understand the algorithm, you can focus at different stages to improve the return on ad spend, the cost per acquisition of each investor, the marketing efficiency ratio that you are receiving. So if you're paying $2 per click or $1 per click and getting the same conversion rate, that could be the difference from a $100 cost per acquisition and a $200 cost per acquisition. If your average investment is $1,000, that's the difference from a 5x and a 10x. So being able to explore tactics that allow you to receive a better click-through rate, going from a 1% to a 2% click-through rate or a 2% to a 3% click-through rate can then reduce the cost per click, reduce the amount you're paying for traffic. And if you are converting at those same levels, you're making significant breakthroughs on the actual outcome. So, it goes a step before that too with the cost per thousand impressions. It's a Roman numeral M in the acronym CPM for campaign health. So while these aren't primary KPIs, they are KPIs, and you want to be able to have an understanding of what's where. If you're getting a 2-3x return on advertising spend and you lift up the hood a bit, you may be able to see that the engine's running at a $50 CPM, a $30 CPM. And if you can adjust some of the targeting filters, maybe getting a $20 CPM, a $30 CPM, perhaps you can put in creative that I don't want to say is clickbaity. You got to make sure you're bringing in audiences for the right reasons so they respond and understand what they're getting into once they get to that landing page. But there is a plethora of different articles and videos out there on how to get higher click-through rates and the type of messaging that you could use that's been proven. And for investment campaigns, for whatever vertical you're looking at, to receive a higher click-through rate and a better cost per click. Keep in mind, I'm fine paying for channels that are, $2, $5 per click. Hey, I'll pay $10 per click. If I know there's a high conversion rate on the other side and I'm able to hit, a $100 cost per acquisition accordingly, and that's the cheapest I can get the click on that channel, let's do it. But That's why it's so important to track and be able to understand what's coming from where. The other thing I'll add about tracking and analytics is they're there to make data-driven decisions. It's not to only focus on return on ad spend. We could run a retargeting campaign to people who are at the checkout process, spend very little because there's only so many people that get there, but we may see a 30x return on that. But there's no scale. If we spent $1,000 for the month on that retargeting pool and saw 30K back, great, we hit a 30x return on ad spend. But if that group's looking to raise $5 million in 3 months, 6 months, maybe a bit longer, it's simply not going to get them there. So you need to be able to really, really gauge what's coming through and determine how you're going to make those data-driven decisions to scale what you're doing to hit the end goal. That's why I recommend beginning with the strategy and building out that algorithmic roadmap. Otherwise, you're kind of just shooting in the dark and can be very focused on the wrong decisions and really need to zoom out. Where do people drop off, Nikki?
Yeah, there's people drop off all the time, different points of the funnel, top funnel, mid funnel, bottom funnel. I always refer back to the funnel when I troubleshoot what's going on with the ads performance. So, let's start from top funnel. Maybe, you're in the awareness stage, you're really cold prospecting. If you're not getting enough reach, you're not getting enough people interested in your campaign, then you might need to tweak your audience, your targeting a little bit, your ads even to make sure they're, like Jason said, I wouldn't say clickbaity, but enough to really get them interested into the campaign and, click to that landing page to get more information on it. Middle funnel, people drop off at the landing page. So there's a couple reasons why people drop off the landing page. Um, the number one being the landing page isn't strong enough or they're not seeing what they want to see. So the landing page perhaps just isn't converting because you don't and we did a webinar before on like landing page best practices, but there's a couple points. Top reasons to invest, we want it to be at the top. The most important parts of your campaign, the strongest reasons to invest in your campaign should be at the top, right? Above the fold is what we call it. So 100% of the people who land on your page are going to see above the fold. They're going to see usually the campaign video, maybe a little slogan, what you are, what you do, and then some top reasons to invest. That has to be the strongest part of your page. And then anywhere below that, there's no guarantee that someone's going to scroll down. And the further you go, the less likely people are going to go. All right. So you want to analyze that landing page, understand why people are dropping off there, and then make changes accordingly. And then there's deeper into the funnel where people are dropping off at checkout, right? Maybe they started their investment, they put in their information, they checked, they haven't checked out, and they left. Um, that could be due to long checkout funnel. There's usually not too much we can do about that, except on advertising, retargeting them with different touch points, and getting them to invest. There's also going back to mid funnel, top funnel. There's also click metrics you want to analyze, cost per clicks, click through rates. If you're getting a high click through rate, that's good. If you're getting a low click through rate, that just means there needs to be tweaking on the audiences or creatives because people aren't clicking on your ads. Same with the cost per click. If you have a high cost per click, it's most likely tweaking the audiences or the creatives to make sure they better align with what your investors want to see.
Now, you want to monitor video engagement a bit differently. What to focus on to enhance your video's effectiveness. Focus on the first 5 seconds, as Nikki was saying with above the fold. The first few seconds will play to most audiences, but you'll lose them after that. You want to have a hook. A/B test different openings. Don't just go off your assumptions for what's going to work. You need the reports to show you what's driving and track how long viewers stay engaged. There are likely things you could build off of for your next videos from there. And look beyond the basic metrics. I was talking a bit about the retargeting pool size. You got to drive enough traffic and early, so you're getting 25 to 50,000 in that pool, and then you're primed for stronger performance given your conversion rate needs to be there. I'll get asked about advertising budget recommendations, and we're fine starting ad budgets at virtually any level need to have enough of a sample size for each of the ad sets we're running. I wouldn't look at anything under 100 a day, $3,000 a month. Many groups start between $5,000 and $15,000 per month on their ad spend. Reg A issuers likely want to start 40, 50K per month, 60 to 100, pretty quickly, and then scaling and scaling and scaling from there. And they're not looking to spend on advertising. No one wants to, put budget towards that. They're looking to buy traffic, looking to buy investments. How many of these can I get? Can I spend 100K next month and raise $1 million off it next month? Can we go to 300K at some point and produce 3 million in a month? And these are channels where you can systematically ramp it up to do that. But it's all based on that retargeting pool, and you need to do it early enough. If you drive 10,000 people the last month on your reg CF, but only 3,000 people the first month, you're limiting how many people are in that funnel and how many people are receiving the retargeting ads. You want to see a conversion rate of 1 to 2%. I was going over that a bit earlier. There are campaigns slightly under that are effective. There are campaigns that are much higher than that, but have limited traffic and limited results. It changes a bit when you're driving cold traffic. Uh, and that's why the retargeting is so important and why it'll end up rounding out by the end of the campaign, because you're bringing more people back. And then measure return on ad spend over the full campaign life cycle, not just a given week, a given month. Look at what it's producing and anticipate spikes as you're closing. So we're talking a bit about the performance. This is why a lot of groups give up on advertising, by the way. They don't see results right out of the gate and they just shut it all off, when really you shouldn't shut off the retargeting until the campaign's done. If your campaign doesn't finish, let's say you're a fintech app and you're always looking for people, the right investor, you should always be retargeting, even at a few dollars a day, so you don't lose that audience. The follow-up's occurring. But use retargeting success to optimize your campaign. How do you improve the results? So, Nikki, applying winning creative formats, what would you say in terms of optimization and getting it to a good point, managing it to a point of effectiveness?
So usually what you'll see in the retargeting pool, retargeting ads, it works better than cold prospecting. So you probably have a better idea on what's working for your brand and your campaign in the retargeting campaign. So let's say, for example, you used a selfie video from maybe lead investor, right? Lead investor testimonial, and you saw that working very well in retargeting, you could consider throwing that ad into cold prospecting. I would recommend change up the languaging a little bit, because definitely like when you're doing a retargeting ad, the language needs to be towards people who've seen your campaign. But I would ask that same guy, maybe he's just charismatic, right? I would ask the same guy to do a ad specifically for cold prospecting audience. Talk about the company, good hook, of course, first 5 seconds, good hook. Talk about the company, top reasons to invest, close with the call to action. Um, and yeah, like I said, I would encourage you to test these across your cold prospecting campaigns and even organic content. For advertising, you're going to reach a portion of your audience, but you might reach another portion of your audience on organic, right? On TikTok, on Google, maybe not Google, but Meta, Facebook, Instagram. But definitely will be placing these successful ads and content across different channels. And we usually see, whatever works on TikTok work very well on, something like YouTube Shorts. Even if they're different platforms, you're in different audiences, right? It's winning format, winning creative. You want to show people what's working.
Leverage the purchase events and checkout initiations to build targeting, prospecting audiences. So basically, you could analyze the audiences that are coming through your retargeting conversions. You could look at age, gender, location, device, time of day, day of week, and prospect accordingly to find similar audiences. You could create lookalike models of people who have converted and hit, a much larger pools of people that fit the same demographics, the same criteria. So you could apply the findings to get more of the right prospects in. And you want to identify and scale high performing elements. The most proactive founders have the most successful campaigns. They're the ones in the videos, at speaking engagements throughout the week, bringing some of the larger investors in that then fuel conversions for smaller investments to occur. Uh, Analyze which audiences, creatives, and funnel stages drive the best results, then reallocate budget accordingly and scale. The top founders that we've worked with scale aggressively. As soon as they're seeing a good multiple return, they do more of it. And that usually creates an even better return on ad spend as a result. If you're waiting for 10x to occur, and at smaller ad spends, you could be hurting yourself in the long run. Where if you're at 3 to 5x and then scale, and then because of the large volumes, you're bringing in more investors, and some of those investors participate at higher levels, you may get to a 10x as part of the scaling process. So very important to be cognitive about where you are and really where you need to go at each stage of the journey. And as Nikki was mentioning, incorporate successful social proof formats, particularly self-shot videos and notable investor quotes across all campaign touch points. So that could be done weekly, and running new creative on top of your evergreen creative, which continues to run. What are some pitfalls that you commonly see, Nikki?
So, yeah, that's a good question. So, number one thing, I see a lot is people use the same ad for cold prospecting and retargeting. And so think about it this way. Someone's entering into your funnel, they get a cold prospecting ad, and now they're being retargeted, but they're seeing the same ad again. It's like, okay, you already introduced them to the brand. Tell them something else about, the investment opportunity. Tell me something different. They don't want to see the same thing over and over again. So definitely when it comes to advertising, use different ads for cold and retargeting. Retargeting audiences, you want to use different type of language. They already know about your brand. You want to, make it different. Vary content to prevent ad fatigue. This just goes into using different creative formats, like selfie videos, using talking about the milestones, any awards, patents, stuff like that. You know, it's gonna get more variety, and people are less likely to get tired of seeing your content over and over again when they're seeing something different every time. Customize
There's right
messages,
and wrong way to do creative.
correct. Customize messages per funnel stage. Three parts of the funnel: top funnel, mid funnel, bottom funnel. Each part of the funnel requires different types of messaging to move the prospective investor along. Um, Cold prospecting, you want to introduce the brand, introduce the investment opportunity. Mid funnel, you want to make sure you're hitting them with different types of ads, talking about the investment opportunity, essentially follow up. And then last but not least, the bottom funnel, before they hit bottom funnel, that area of the funnel, you really want to be targeting with webinars, hitting them with organic content, email marketing, and also maybe lead formats to get their email number, talk to them one-on-one, and make each ad compelling, and make sure they're clicking and keeping them engaged throughout each part of the funnel.
So we've gone over a lot of information today. Final thoughts for campaigns looking to leverage retargeting, test and optimize across audience segments, experiment with different creatives and audience types, site visitors, partial investors, complete investors to find what works best for each group, including page engagement. Don't shut off ads completely, as retargeting needs ongoing momentum to achieve the 7 to 17 touch points needed for conversion, even if at reduced budgets. And remember what you're playing for and what other available channels there are for you. Advertising should be fundamental, whether you're buying paid publisher placements and showing up in investor newsletters, whether you're buying placements on sites, whether you're showing up in social media feeds through social advertising or search engines. These are places you can buy traffic from your prospects, and you're going to want to continue that. Even if you're going back to the drawing board, keep retargeting running and set up tracking for various timeframes: 7, 30, 60, 180, 365 days to keep audiences warm for future raises and maintain engagement. Nikki, anything you want to add to that before we wrap today?
Um, I think we've covered a large part of it already, but you need to retarget for any successful crowdfunding campaign. You want to make sure you're getting people into your funnel, driving enough traffic to your campaign. And again, you cannot crowdfund without the crowd. So make sure you have that crowd, get that momentum, continue to retarget, try different formats. And then last but not least, test, optimize, and scale.
I knew you were gonna say it. I knew it. I knew that's what you're gonna leave the audience with. Thank you everybody for tuning in and get in touch with us. Get in touch with somebody. You want as many marketers to look at these campaigns as possible and give you feedback. We welcome a warm marketing discussion anytime, and only a few issuers hit the full goal. So everyone who's tuned in right now, don't be bashful. Get in contact with us. Talk to Nikki on LinkedIn. He is awesome and appreciate you showing up today. We'll see you next month.